So I want to take a moment just to look at some of the trades over the last few days, looking at the longer term charts. I've been doing a lot of videos on the short term charts lately, but how can we use the longer term charts to help us to get into those trading opportunities? Now, you're probably already familiar with the sniper strategies. This is where we're looking at those big reversals where those indicators change color from green to red to identify a sell trade, or red to green to identify a buy trade. And we're looking and focusing on those big discs that pop up on the chart. But there is a bit more that we can do if you really want to get into trading a little bit more. So I do plenty of videos about the normal trading opportunities, but what I want to do is take a moment to have a look at some of the other trades that one could do if you want to get a bit more tradey with it. So I'm going to look at this big move down on the Dow. Let me just maximize my chart for a little bit, and just so we can get into some of the details. A big, huge sell-off, and of course a lot of people have been tempted to buy it on the way down. Be honest, you probably were if you're watching this video. Most people were, but it was a big move down the whole way, and it wasn't until this bounce at around sort of 700 or so that we actually got any sort of lift really to the upside. So what was important about that, and how could we have potentially traded that? What can we learn from it for our future trading? Let's take a moment to have a look at it, shall we? What I'm going to do is just tighten this chart up a little bit so we can bring more of the history in there. And as you know, it's been a heavy bull market for quite some time, and this is the first sort of real correction, if you like, for a long time. So, but what we've had down here all of this way is a series of support levels here. 1, 2, 3, these horizontal green lines, 4 and 5. And what's interesting about each of these is that we really tore through them like a hot knife through butter. And you know, when you look at support, it's very tempting, particularly when the market's cheap, it's been battered already, to try and look at it and buy it just because it has gone down. But what you need is that turn. You need a reaction off that support. There's no point buying it just because it hit support. You've got to buy it because of a reaction off that support. Do you see? So otherwise it could just tear straight through it. And that's really what we saw. So that's the daily chart. And you know what? With a big move like that, it's going to take a good few days before we get a potential buying opportunity. So what we can do is go down the time frames. And I want to just keep that chart like that for a second and look at some of these numbers. I'm going to go down to a 4-hour chart. This is not for everybody, I absolutely mean that. But if you've got a bit more time, then you can get more involved in some of those shorter opportunities, a bit more time to analyze those opportunities too. Let me just compress that up a little bit, and you can see the big turn down that we've had from there, and you can see how that's tracking through to the daily chart as well. So you're seeing my cursor on the horizontal and vertical lines. This is why you're using higher time frames and multiple time frames to get a picture of waves within waves. But really the point really being, if you're looking for the snipers, we haven't really had any pullbacks over that whole period. A minor little blip here, outside of its natural trading range though, of course, and it wasn't really until here on the 4-hour chart we can see that we started to get a buying opportunity. Now what's interesting about that is that it's found that support off that pivot. Again, look at my cursor on the bottom now, on this big line. The only time we got a buy off the 4-hour chart was having tested, like whack-a-mole, had a little look below that support level, and then it's bounced back off it. This is confirming context. So once we see an opportunity to buy on the 4-hour chart, you're thinking, okay, so why buy here? What's so clever about this area? Well, it's rejecting a pretty major support level from about 6-7 months ago. So and you know what? That led to a pretty big rise up in the market back then. So what you're doing is you're establishing context for a move. Now this is quite technical, and you don't have to trade this way, and you certainly don't with our indicators either. But if you're looking for more opportunities, what you're going to get from this is a quicker entry point. So instead of waiting all this time for the market and the indicators to catch up, and that's going to happen, actually we had an earlier entry point off the 4-hour chart just by dialing down the time frames, and then you can see a real big significant rally. Actually here we are, but the market from the buy 25600, you know, it's rallied what 1500 points or something after that buy trade. So you know, the opportunity is absolutely there. It's just about knowing what to look for. And I always keep saying this, that you don't have to trade like this, you know, but some people really do like to get more involved, and in doing so you're going to find extra opportunities, and with that it's a tighter stop than you're going to find on the daily chart, which means bigger trade size, which means bigger opportunity, and so on. So Crucially, of course, it's going to stop you buying when you shouldn't be. It's going to help you to buy when you should be, when the context is there, and stop you buying when the market's in absolute freefall mode. And that's where most people have been killed on their trading accounts over the last few days. And it's not just the Dow. Look, we can apply this to other charts as well. This idea of context is a really, really important one. And if I take a look, for example, at crude oil. Okay, so if I look at US oil, that's NYMEX crude oil, we've been seeing some big moves of late. And you know, you're not going to get on every single move. I mean, that's just fact. We weren't in this downward move, largely because the trends of the market were up. Now, on the browser platform, you know, we get arrows to tell us of the trends. Otherwise, we're just looking at the color of this line when you're looking at the higher time frames. But the point being is that there was a big move down. And that then led to a big move back up again on the 2nd of March. But how? How could we have spotted that as a potential opportunity? Again, we're going to dial back into context, okay? And then we're going to try and find if we can get on that buy. So what we're going to do is take a look at this. Tighten. Oh, look, there it is. And the move back from January last year. We found that level. See how it's just nudged it? It's like when you go into the sea or the swimming pool, you dip your toe in, you're like, oh my God, that's cold. It's that sort of a thing that we're looking for. It has a little look. You're finding the reaction. You want to see that, oh my God. Then the market starts to rally. You actually saw a similar bit of context from the weekly chart as well, as you might expect, but the same sort of prices. Again, bottom left. I know this is more complicated, but you know what it's doing is it's saying, well, look, if it's going to go up, it's going to go up from here, right? So you're waiting for it to start to rally. You're waiting for the turning point, waiting for it on the daily, the weekly, the monthly. That's going to be a little bit slower. If you want to dial down, you can have a look at the 4 hour. There was the buy on the 4 hour chart, okay? And I know you're not buying at the lows, but you're buying it at a pretty reasonable price after that change in direction is confirmed. And again, just to be clear, not a sniff since that last sell move. So there's no reason to buy any way during this period until we had the reaction off that support level. So, and then a significant rally of about $2. Now $2, that's 200 cents, obviously, that's a pretty big move. And it's about getting that context. Do you see? Support on the daily, support on the weekly. Now you're looking for an excuse to get in. Great, I like that. I found the reaction, I found the context. Let's give me a reason to get into that trade. Well, there's a sniper turn. There's my opportunity. And you can see the same sort of thing on numerous other trades. Dollar yen, for example. This was a bit earlier in the period, so the first sort of move here when we started to come back down, you know, massive move on the daily chart. And do you know what? You're selling it quite low. It's fine. It's a valid enough trade. But again, contextually, why is that a good trade to take? Well, if you're looking at the weekly, you can see that straight away. The last time we were up at these levels was April last year at that 111.95. We've nudged it. So the reverse now is happening on this chart to the poking the toe in the cold water. It's like that game whack-a-mole. The mole's popped its head up, it's having a little look around, seeing what's going on, and then it's going back underneath the hole. Do you see? And that's exactly what we happened. Dollar yen poked its head up above this pivot on the weekly, then came smashing back down again, which then led to the sell trade, which then gave us the context to take that trend, which is actually against the major trend of the market. But again, we're looking for reasons to take it. So it doesn't have to be complicated if you know what you are looking for. So that ended up being a really nice, profitable trade on the daily. But equally, had we have had the wherewithal and the time to analyze this, we could have got on that trade much earlier by trading off that 4 hour chart as well. Now I appreciate, and I keep saying this is a bit more complicated to do. Not everybody wants to trade like this. But if you have the tools and if you have the right sort of mindset, you can find a lot more trading opportunities, really high probability ones. So what I encourage you to do, particularly in these fast moving markets, is think before you're going to place that trade. If you're going to trade, if you're going to risk your hard-earned money on a trading opportunity, what's the context? Yeah, I'd like to buy, it's fallen a lot. That's not context. That's just hope. That's greed. That's fear of missing out. That's all sorts of horrible stuff that is not going to make you a profitable trader. If the context is, right, well, the pattern is this, or it's done this, which is previously, that tends to happen after this happens, that sort of thing. In this case, It's found support, it's found resistance, it's reacted off those levels, that's then created a turning point, which is the type of turning point that I then want to take. And you're going to see these patterns happening time and time again, and I'm going to continue to put them in these trading videos just to help you get in that right mindset when you're looking for trades. Whether you're using these indicators, whether you're using your own indicators, the core principle you need to get out of today's video is look for context. Why should I be getting into this trade now? What's the main reason why the market is going to react off this level? It's all about confidence, guys. Hope you found the video useful, and all the best with your trading.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.